Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin. We're going to be looking at the move that we've seen to the downside over the last several days. We don't always talk, just pulling up TradingView, but in this video we are going to pull up TradingView rather than, more of the traditional quantitative analysis and custom charts that we like to normally do. So if you guys like the channel, please go ahead and subscribe, give the video a thumbs up, and also turn on your alerts if you want to be notified of future videos, like the one that I published earlier today, which was on, building a portfolio to maximize your risk-adjusted returns within the cryptocurrency asset class. So please check that out if you haven't seen it. Now, what we're going to talk about is, yes, Bitcoin has been moving to the downside fairly recently. If you look at the daily chart, you can see that we've had several candles in a row that were red. Now, we know that even though we've seen this, it's actually pretty much on par with what we've seen even while we've been in this price channel. So if you just loosely draw a channel of around 8,600, 8,700 or up to around 10,000 or so, you can see that we've been in this channel for a couple of months. If you just take a measured move from here to here, you can see it's been around 59 days. So we've been in this channel for 59 days, and we can't overstate enough that we don't typically spend a lot of time within this price region. We just kind of go up through it and then come back down through it. Same thing here. We came up and then straight back down. So the fact that we can hopefully establish some level of sideways movement in this region can be attractive from the point of view of a theoretical bull market starting. Now, we don't know if the bull market is going to start yet. We need to hold the 20-week moving average. This is that moving average we've talked about for a long time, and showing that it does tend to hold as support during the bull market. And even though Bitcoin has been trending down over the last few days, it hasn't seen like a catastrophic crash of say like 40-50% recently. Now, if we were to go back down to the 200-week moving average, which is all the way down here, it would correspond to about a 35% drop from where we currently are. But in the short term, the things that we want to watch out for are the 50-week moving average, which is at around 8,600, 8,700, and the 20-week. Now, we know that the 20-week moving average will probably start to bend up over the next month or two. And the reason for that is because if you look backwards from the 20-week moving average and just go back to where that moving average is right now, it's at the top point. So in the short term, we've said this for a few weeks, we expect it to go down. But once we get rid of these candles here, like basically the next say 2 months of candles, as long as the price of Bitcoin isn't just crashing, then the 20-week moving average will likely start to increase. The 50-week moving average is going to continue to decrease. And the reason is because if you just look backward in time to 50 weeks, we're going to be replacing, these higher bars up here with lower prices, lower candles down here, unless we really see a move to the upside in the short term. So we're likely going to see the cross of these two moving averages sometime in the next few months. So if you go back to the last time that we really kickstarted the bull market, remember the 20-week did cross the 50-week right here. And after the 20-week crossed the 50-week, so you can see the 50-week was going down, the 20-week started going up, and then the next time we held it as support and we started the bull market. I'm not saying that has to happen this time. For all I know, the 20-week isn't going to hold, and we're going to go back down to the 200-week, and we're kicking the can down the road maybe another 6 months or so. But it's interesting to me that we've been in this channel for as long as we have. Now, despite the fact that we've seen these movements to the downside over the last several days, if you take measured moves from the last few weeks, we moved from up here down to this point in 3 days. So this was a 14% drop in 3 days. From here to here was a 11% drop in 5 days. And this was only, a little over a month ago. This was May 20th, May 21st. This was only a little over a month ago where we saw an 11% drop to the downside, right back to this region. So where would I be looking for a key level of support to hold? If it's going to hold, it would be around this region here, and it corresponds to around 86, 70 or so. And this also corresponds, just happens to be, at the present time, the 50-week moving average. So you can see the 50-week moving average at the present time is 86.70. So this is that point here. I'm definitely looking at the 50-week moving average. If we fall below that, I would anticipate more altcoins starting to bleed against Bitcoin. And if we go back down to the 20-week, this is where you really need to watch what's going on. And the price isn't really that far away from it. I mean, if you look at where we currently are and just draw a measured move down to the 20-week moving average, it's only an 8% drop. For Bitcoin, this is just like a Tuesday, or a Thursday afternoon. You can anticipate moves like this all the time. So if you see us drop down to this level, this is the key point I think that you want to watch out for, because if we're closing weekly candles below the 20-week, then it's likely, this is not financial advice, but you likely would want to consider consolidating your positions if you're holding, 20 different altcoins, because when we do drop below the 20-week, you can see that we tend to really drop when you see those candles. This one was a 20% drop. This move below the 20-week over here was a 35% drop or so, 37% drop to the bottom of the candle. So going below the 20-week usually is not a good thing in the short term. But we know that we prescribe to lengthening cycle theory again, and we can take advantage of a potential move like this. I don't know if we're going to see a move back down to the 200-week moving average, but if we do, I would treat it as a gift in a sense, because the 200-week moving average has historically been a key level of support. Even if in the short term you can point to wicks, that temporarily go below it, like these, even some portion of the candle, it's typically short-lived. So the 200-week moving average, while at the end of the day, it's just a line. It could break. It obviously could break. But over the next couple years, I think looking at the 200-week moving average is generally a good region to be, DCAing into your investment within the cryptocurrency market. With this regard, we're talking about Bitcoin. So keep in mind the 20-week moving average. I can't stress enough, in my view, how important this level is. And again, the 20-week moving average is currently at 82.47. Do I think we're going to go there? Not necessarily. I don't try to, just play on your emotions. Like, you're watching a video and basically all of, crypto YouTube turns from bulls to bears in the matter of a day. And then they'll turn from, they'll go reverse. So they'll turn from bulls to bears and then bears to bulls, basically on a short-term price move. If Bitcoin were to go to $9,300 tomorrow, then at least half of crypto YouTube would then be bullish and say we're going to break 10,000, 10,500. This is all just noise. I would say just focus on the bigger picture. Just focus on your strategy for this market cycle. Focus on accumulating the sectors of crypto that you want to accumulate. And then just be prepared for the ride over the next several years. Don't stress about the short term. We're all going to be here, obviously, for the next several years following the markets. If you want more substantial content than just pulling up TradingView and me kind of just rambling for 15 minutes, then check out the other videos, like the data science videos that I post, where we look at portfolio management. We look at ROIs, expected ROIs, and volatility of assets. Check out those. They don't tend to get as many views, but I think that they're 10 times more insightful than the TradingView videos that I make. So I get it that people like to look at price. You like to hear these short-term price predictions, but I can assure you that everyone, no one knows what's going to happen with Bitcoin. Any short-term trader, you can easily point to so many times they've been wrong, and playing on your emotions by saying that Bitcoin's dropping to $1,800 tomorrow when you see a 5% move to the downside it's feeding on that fear that you have. So tune this out, because it's not important. It's completely irrelevant. It's just noise. It's for entertainment purposes more than it is for your own personal value, I would say, in terms of your finances. So I would say tune it out. Just focus on things that can actually help you over the long term, and actually quantitative analysis that is more useful than just drawing imaginary lines on a chart. So I will get off my soapbox for the day. I hope you guys enjoyed the content. Again, watch out for the 50 week. Watch out for the 20 week. These are clear levels of support that could help prop Bitcoin up if we fall to that level. Again, 8,600, 8,700 is where the 50 week is, which is also basically this window that we've been in for a couple months. I mean, don't discount the fact that we could just pop right back up. These are always, this is always a possible scenario because we've already done it several times. I mean, we made the move here, we came down to the level, we went straight back up, came back down to level, straight back up. It doesn't mean that we're going to, but it's not just because you drop a few percentage points over a few days does not mean we're headed to $1,800 Bitcoin. So that'll wrap it up for this video. If you guys like the content, please subscribe. I would really encourage you to check out the other videos that are that I make that are not on TradingView. If you want to really learn about more of the quantitative analysis and how you can use a more in-depth approach to your advantage. Subscribe to the channel. Check out the Telegram channel in the description below. Give the video a thumbs up, and if you want to see premium content, we do have a premium list, and you can also find that in the description below. That'll wrap it up for this video. I'll see you guys next time. Bye.